higher interest rates and slowing growth has not been positive to the silver price. However, green shoots could be emerging. We're going to take a look at the fundamentals of the market, run our eye over the technicals, and see if we can get some clues on where the silver price can head next. Let's start with the fundamentals of the market. We'll break it down into two sections, the precious metal element and the industrial metal element. First, in terms of silver as a precious metal, it's been a tough one on that front. Higher interest rates across the globe, especially in the United States, has drawn flows away from precious metals and into higher yielding assets. The second order effect of that too is that because interest rates have risen so aggressively in the United States and the US economy has been so relatively strong, it's resulted in an uplift in the US dollar, which has put a mechanical downward pressure on the silver price because, of course, silver is priced in US dollars. Now, in terms of the industrial metal side of things, well, there's that US dollar story as well. But in particular, the market has been dealing with what has been a fairly sluggish global growth backdrop, especially in terms of industrial activity in places like China, Europe, and to a lesser extent, the United States as well. The impact of that is, of course, silver goes into so many of the major consumer products that we consume every day, ranging from household appliances to electric vehicles to, of course, solar panels and the like. And the fact that we are seeing slower growth has meant that at the margins, the demand for silver has diminished. Now, looking ahead, things are looking perhaps a little bit more rosy, and you could argue green shoots are emerging for the silver market. The Silver Institute released a report only this week to suggest that the deficit in the market in 2024 should be larger than the one experienced in 2023. And a lot of that is due to the fact we are continuing to see this ramp up in demand for things like solar panels, electric vehicles, and other green and eco-friendly technologies. On top of that too, there's the element of perhaps silver seeing some demand coming through as a precious metal on the basis that interest rates have arguably peaked, especially in the United States, and global growth is starting to slow. So those relative yield spreads should move back in favor of precious metals, see some of those flows go into the likes of silver, gold, and others as well. And on top of that, if we do start to see interest rate differentials between the US and other economies start to narrow a little bit as well, and that US economic outperformance diminish, then maybe the US dollar will also weaken and give a bit of a boost to the silver market as well. Turning to the technicals and starting with a weekly chart, we can see some constructive signs emerging, arguably a pattern of lower highs on the price here. And if you look in the shorter term, although we have seen prices trending lower since the middle of the year, they have carved out this pattern typical of consolidation and then continuation of the prevailing trend, which of course would be to the upside. So in the last week, we've observed price breaking through downward sloping trendline resistance, buyers clearly defending any dip below that $22 per ounce mark. And it may just open up a bit of a test of $24.50 in what would otherwise be a continuation of an upward move. Which takes us to the daily charts as well. And again, we're seeing signs of constructive price action. You can see the fundamental structure of the market remains the same in terms of breaking out through that downward sloping trend line resistance. You can see the kind of support zone that had emerged in the market around that sort of $22 per ounce level where buyers were defending. But in the last couple of days, we've managed to see, catalyzed by some of the macroeconomic data, in particular, some of that weakness coming through the US dollar, a drop in yields because of soft data, maybe even some of these concerns around global growth. So actually a bit of a precious metals play more than anything else, that we've broken through the 200-day moving average. And again, the next key level to watch appears to be around $24.50 now that we have seen that level breached. Let's start with a run through of the gold and silver ratio, because sometimes it is useful to pick turning points in the market. Historically speaking, when we do see that ratio getting above 80, it is an indicator that we'll see some strength in the silver price emerge, a little bit of a reversion emerge. It hasn't happened so far this year. In fact, the gold to silver ratio has been above that 80 level for most of this year. However, over the last few weeks, with some of the shifting dynamics in the market, we're seeing, well, that ratio dive, indicating maybe we're getting to an inflection point that could herald further silver strength from here. So it's been a tough year for silver bulls overall, but there are green shoots emerging. And some of those key technical levels on the chart suggest that perhaps there is some looming upside as we enter the end of 2023.